Welcome to Volstars, a GammaStrike production.
All right, welcome to Volstars. Got Jay Fresh, myself. We've got Girk, and we've got Ron today taking Dork's spot because Dork's been doing a little back end maintenance, if you know what I mean. So let's just get right into it. What do we got today on the docket, Ron?
All right, so this week I think we're going to try to do what we did last week, where we're going to go for a slightly shorter episode. But one of the things that we want to do is kind of do less of the repetitive stuff. So is instead of focusing as much on like oil and what's going on in Iran, we're going to be trying to do a little bit more topical. Give us two topics to kind of focus into. So we're going to today the big topics are talking about what happened with Bessent. Why was he in the news this week? What's the impact of what he did? Why did he do what he did? And then the second topic that we're going to talk about is tariffs. So with that, we'll let you guys open it up with talking about Bessent. What was it that he did this week?
So, what was it? Was it Thursday or what? Wednesday? Sorry,
I think
Wednesday.
Yeah.
Yeah. The Treasury raised the maximum size of its liquidity supported buybacks, or liquidity support buybacks, in the 10 to 20 and 20 to 30-year sectors from 2 billion to at least, and there was, obviously this was left open ended, 4 billion per operation, effective September 9th through November 4th. Bessent then suggested that the purchases could become even larger, which is obviously why I left them open. So mechanically, that means that the dealers can offer the Treasury older, less liquid, off-the-run bonds. The Treasury would buy the cheapest acceptable offers through a reverse auction. Then those securities would be retired. The Treasury replenishes the cash that they use to buy those through new issuances, which would largely be in bills or current coupons. So it's not QE. It's important to point that out. I saw a lot of people on Twitter calling it QE. The Fed's not creating reserves to remove debt permanently from the private portfolio, although they may buy the bills that the Treasury issues, which would make it that. However, the Treasury explicitly says that the new issuance replaces the repurchase securities. So the buybacks don't reduce net borrowing. And I think they still expect to borrow 739 billion in quarter three and another 628 billion in quarter four. If the original schedule remains intact, then 7 of the long end operations remain between September 9th and 4th. So that's $28 billion in purchase capacity, which is 14 billion more than they planned. Obviously, this was to fix plumbing and liquidity at the top end. Yields between the 7 to 30 year have been kind of flying off the charts, and try to remove the more difficult to trade securities from dealer inventories, and that obviously improves liquidity and frees up the dealer side balance sheets, which may make them more open to buying the new issuance at lower prices, or lower, higher prices for the lower yields. We'll just put it that way. I don't want to confuse people.
Can I interject here a little bit and
Yeah.
read a quote from, or a partial quote from Bessent back in 2024? Kirk probably already knows where I'm going with this, but I think it'll be fun. So this is from some investing.com slop article I found, but during a Bloomberg roundtable in June 2024, Bessent accused Yellen of having, quote, taken control of monetary policy, end quote, through Treasury issuance, and said the change in issuance composition had, quote, eased financial conditions substantially, end quote. Just thought I would read that out loud because here we I one of the memes that has been going around the financial social circles, which I find very funny, is people have put Bessant's face on Janet Yellen's head.
Nice.
Because he's trying to do the same
do
thing, but
they keep the
Yellen
juice
already did
caboose?
it. Yeah, Yellen
Who's got a
already did it.
juicier caboose, Bessent or Yellen? That should be a good answer for our audience for next week. I want to know. Can we do a poll, Ron?
Yes, we will get that
Perfect.
poll added. So make sure wherever you're watching this, you answer that question right now. Or feel free to just tell us in the comments why you want to argue who has the juicier caboose.
Yeah, I mean,
It
both
could go either
both
way.
secretaries of the Treasury have juiced issuance. So who's juiced harder? Who's the juiciest?
And we'll answer that next week's episode for everybody.
Yeah, that'd be perfect. Anyway, do you want me to keep going, or do you want me to just comment more on Bessent doing the exact same thing as Yellen? It's called fiscal dominance, J-Fresh. It's an attempt by the Treasury to take over the role of the Fed.
Yeah, well, I think it's to me it seems like this is social posturing, and it is sort of like a power move from Bessent towards Warsh to kind of see, like, you know, it's like a kind of like a chess match where he's positioned, he's done like a checkmate, or maybe the move right before it, a check, or maybe a
What's it
soft
called?
check.
What's it called when you try to flip the table over, but you realize that your arms are too weak from playing chess in your mom's basement for 12 years?
I believe that's called
Wait,
the
whoa,
T-Rex.
whoa. Are you accusing
Our most
U.S. Treasury
successful
Secretary
soybean
Scott
farmer?
Bessent of being a chud?
Yes. The
But
bond market called him a chud.
but we already just found out recently that Kash Patel, you know, found by a judge to be a chud. So is this administration just full of chuds?
You know, yes.
Okay.
Yeah, I think it might be. It's almost like when you choose a group of influencers to run your government and former Fox News anchors because you like how hard they kiss your ass. You may not be paying attention to their qualifications for the job at hand. I don't even think Bessent, and he is probably the most qualified individual in the entire administration.
Yeah, agree.
By a long shot, is qualified to be Secretary of the Treasury. He's a bond and FX trader. I wouldn't put me in charge of the Treasury. I would spend 4 years lining my pockets.
Well, why not both?
Well, that's why he's a chud.
Oh.
Yeah.
It checks.
So what do we think is gonna happen from here? Because we saw that the bond market was kind of like, all right, bet.
Well, I mean, the purpose.
Like, we still don't want your dog shit debt.
Yeah, so if successful, this move should have immediately caused a short squeeze in 20 and 30-year treasuries that were trading at some of their lowest, like, or highest yields for the last, several years, since like 2008, 2007 in some instances. So we were getting like financial crisis levels on the 30-year bond. And what should have happened is it should have produced an immediate and aggressive short squeeze. But there's a problem, right? Is that Bessent's trying to sell this as QE. That's definitely the narrative they wanted to generate. Because the Fed's not cutting and they're not easing the interest burden on the Treasury needed to do something themselves. And this was their response. And since Warsh took over, the Fed has just continually reduced the amount of rollover they're giving to the Treasury in those bond and that like rollover repurchase of the bills. So it started under Powell back in January at 40 billion a month, right? Remember that when they stepped in and they were like, "Don't
Mhm.
worry, we'll buy this short end," because it kept like SOFR kept rocketing up above IORB, and there's no on RRP balance left to pad anything. So it's just like eating into fucking reserves every time everyone needs short term cash. And so Powell, being the fucking ultimate dove that he always was,
Another
uh,
chud.
yeah, also another chud. Let's be clear.
A true Burns.
The first Trump appointee, right? Trump's now appointed 2 Fed presidents.
Huh. Yeah.
Yeah.
That's
Yeah,
fun.
both possibly chuds. Although Warsh may be less chuddy. We'll find out.
We'll find out. Yeah. Well, this is
I
this
think
comes.
Warsh's purpose is to just destroy the Fed, but we'll see.
It might be, but this comes back to like why did he do it, right? And you're talking about like the short end. Well, he's dumping. Obviously, the last time the short end actually came under real stress, like you just mentioned, was under Powell, and Powell responded by saying, "Well, we'll just buy a bunch of it." Right. So Powell, total bitch. I think that's pretty clear.
Well, they were.
And
This all came. Hold on.
Scotty's trying to do the same thing with Warsh, right? Here, take some more issuance. You gonna buy it, or you gonna let yourself get pantsed because the rates are gonna jump off your minimum here?
I mean, the Fed holds everything to expiry. They actually don't care. I think Bessent's move is entirely targeted at like primes. He needs primes to come in and fill out his auctions, and they're increasingly doing so less and less. We had 1 auction immediately following this announcement, and it tailed the same day. And by the end of the week, yields were right back where they were. So Bessent's move did nothing. But I mean, under
Powell, what
Powell,
fixes this problem of the tails? Higher rates.
Yeah, it does. If you give people
it's almost like if you spend 6 to 7% of GDP every year in deficits, that you're going to go towards 6 to 7% rates.
So,
What are you eating, by the way? I have to know.
A cold egg roll.
How many? You've been eating this egg roll for a while.
It's big.
Like, how big are we talking? Like Chipotle burrito big?
Half a Chipotle burrito?
Holy cow. That's
a big egg roll.
I know you're kind of an egg roll snob too. So this is probably a very particular type of egg roll.
No, it's just a pouch of cabbage and barbecue pork and a giant wonton wrapper.
Oh.
It's good though. It's good cold, which is weird.
Oh, you're eating it cold. Oh,
I am.
God.
I am. It's delicious. Anyway, the important thing is like Powell had to start cutting rates because he's a moron. And but he was still doing quantitative tightening. And so very slowly with each rate cut, they were squeezing the front end and pushing the back end up. And eventually Powell was
Dork
like,
knows all about that.
yeah, he does. So Powell was doing, head down, ass up on the yield curve. And he had to stop doing that. And so what he did, what his answer was to continue cutting, but to stop quantitative tightening. So he was like, okay, we'll just take our extra money every month and roll it over into bills, and then we can ease up the front end, because they were pushing the EFFR down under the IORB rate with each successive cut. And so what was happening is all of the short-term financing demand was spiking SOFR up above IORB, which means it's no longer beneficial to now the short-term lending rate is higher than the interest rate on reserves, and so that that tightens up front-end lending very, very quickly, and it to the point where it was even going above like the standing repo facilities during the intraday. We're out at I think at the time it was 4 to 4%, and the Fed is at 3.65. And so and we're getting a little bit of tightening at the front end right now, actually, and have been since the end of last month, which has been interesting, but August is weird, so we'll see how that turns out. Anyway, once Powell did that, a couple months later, he was like, oh man, we're rolling over too much. We still need to be reducing our reserves. And so he cut it in half. And then Warsh came in and he's basically gotten rid of it completely.
Yeah, he is
since
not a
Warsh
fan
started,
of
the Fed is
holding high
stop
balances.
buying bills.
Yeah.
They're still doing their required purchases, but they're not doing anything above that. It's been $5 billion.
And they're still buying.
Month.
The funny thing is they're still buying bonds. Which, if people don't know, we've said this many times, but the Federal Reserve never actually stopped increasing their holdings in bonds throughout any of this since 2008. They just continuously buy more.
It's also a big problem to try to get the Federal Reserve to sit on nothing but short-term debt.
Mm-hmm.
If the Treasury issues no coupons, no duration, the Federal Reserve just becomes a fucking money market.
Yeah.
And if the money markets crash, the thing that the Federal Reserve is designed to be there to protect will no longer be able to do that, because it'll just get fucked when the money markets crash.
Yeah.
So if 2008 had happened and the Fed was sitting on nothing but bills, our economy would have never recovered. We couldn't have bailed out the banks. So maybe this is the answer. Maybe the Fed does need to be long bonds or bills. That way we can't bail out all the AI companies. But anyway, moving on. They
won't need to be bailed out. That's a going concern. They're all profitable.
Scotty wanted higher long bond prices and lower 10 to 30-year yields. If he was successful in his action on Wednesday, he would have gotten them. And he did Wednesday.
Yeah.
And then, obviously that tightens up the spreads on all the off-the-run shit that nobody's traded in 10 years, and that's good. And he would have gotten a flatter yield curve, because all of the financing's in the front, so that's going to push the front up, back down, and just like J Powell coming out of his head down, ass up bond position. And then, we would have gotten some temporary relief for growth stocks and housing and utilities and REITs and everything that's leveraged to the tits, and with a very small cash injection, which is really all the Treasury can afford, because we're paying $1.2 trillion a year in interest. And that didn't happen. They haven't started buying back yet, but the scale is too small. A $14 billion incremental increase barely covers a single auction over a quarter. And then obviously that's $14 billion is not going to overpower our $40 trillion now $40 trillion deficit.
Yeah.
And so the persistent deficits are still there, as is expanding interest rate expense due to all the hyperscalers. And I went into a whole thing on Market on Close Thursday or Friday, where I went like way deep into the weeds on like all how all of this AI issuance stacks up compared to sovereign debt and what's pulling the demand. And let me tell you, Apple's balance sheet is way better than the US. So is pretty much every other hyperscaler. So why, I guess the short and sweet of it is, why the fuck would you ever want to buy US 30-year treasuries when you can get 2% more real yield buying Amazon bonds for 20 years out?
This also relates to crypto, which also went on a bit of a tear this week too, right?
Mm-hmm.
Speaking of the chuds in the administration, I don't think I've seen a chuddier assortment of goodies since I saw that crypto news announcement or whatever that was, that press conference on crypto regulation, which is just them all basically begging Congress to pass some legislation that'll allow crypto grift to proliferate in the US. It was just the most chuddy group I'd ever seen.
Yeah, the dude from Ripple was there.
The Winklevoss twins, it's so funny. If anybody wants to go back and watch it, like the entire time, the Winklevoss twins looked like they were actively holding in poop while they were having like bowel movement cramps.
I think
Even
that's
like
just
while
who
they
they
were
are, though.
while they were speaking, when they were just standing in the background as like the weird hulkish oafs they are, they just at all times looked like poop was about to come out of them. And it's very funny to watch that entire thing with that context in mind. So if you're bored and you have a weird thing
really bored.
and you have a weird thing for middle-aged identical twin scat fetishes, that's the thing to watch.
Thank you, Jay Fresh.
Which, if I know anything about the Venn diagram of our listener and their personal tastes and fetishes, we nailed that one.
Probably. I mean,
Didn't think we were going there this episode, did you?
Nope, I didn't. Yeah.
All right. Well, that's that. I think that's a high note to end the episode on.
No, we gotta go to the next topic.
Good night, everybody.
Let's get into.
I think a lot of people don't
though.
understand the effect on crypto they're on.
Yeah.
Like, so I mean, first of all, when treasury yields fall, right? Like, holding non-yielding assets becomes relatively less expensive, and Bitcoin does not produce a yield. So, that's probably part of what triggered the short squeeze, alongside the Clarity Act or whatever bullshit they're trying to, set up their next grift with. But like, also, like the assumption is that you're, along with lower yields, you're going to get a weaker dollar, and that's going to ease financial conditions. And when financial conditions are eased, leverage on Bitcoin as a dollar replacement goes way up. And so, this is obviously like the first step in like a fiscal dominance expectation. And that's going to cause everybody to buy in to crypto at lows, especially as hard as they feasibly can. However, the failure of that probably means that the short squeeze in Bitcoin will top out once the shorts are exhausted. And then, they'll probably pile back in again because yields are back up, and the expectation should be that the dollar will gain strength. Although I will say, if it doesn't, everybody who owns crypto is completely fucked. So enjoy one last moonshot, because if yields are going up while the dollar tanks, you've got a big fucking problem. Anyway, so that's kind of where we are. Like, I think it drove a squeeze. But we're probably not going to see it continue to move up unless something breaks.
Yeah, I mean the other side of that too is you have a ton of, I've mentioned this before, but all the AI chuds and the crypto chuds are actually the same chuds. And so all like these neo clouds and these little outfits that are vying to nibble at the edges of this compute growth cycle or whatever we want to call it, they all are pivoting from crypto mining, right? Which is why they're in the position that they're in to offer up power and leases for land and stuff. They all have old chicken coops they've already repurposed to serve as makeshift data centers.
Yeah.
And when you've got Mark Zuckerberg erecting tents to run Blackwells in, a chicken coop starts to not look so terrible. And so you've got all of these people who are small but meaningful when added up together, and are all leveraged to the tits trying to get into AI as fast as they can, who are all sitting on a bunch of crypto assets that they would love, that they have used as collateral for that leverage. And so anytime crypto bumps, you've got people on the other side that are looking to use that to finance another build out, right? So they're looking to sell. And that's, for me, long term, yeah, not super fun from the crypto side. On the other side, you've got a lot of deficit spending, which is probably why most people are getting into crypto to begin with. And to that I say there's no escape. Crypto is not going to save you from that, because you can't buy anything in the world except for those dog shit currencies you're trying to run from. And nobody's going to want to just give you free money, no matter how little value that money has at the time.
Yeah, I don't think we're gonna get what all the Bitcoin maxis want and get like a cycle of QE. I mean, they could do it, but they won't be able to. It won't be the same.
Yeah, I think the QE bet is less. I think the odds of getting the QE that everybody wants has definitely gone down since Warsh came in. I think it's still left to be seen what Warsh will ultimately do when actually faced with real adversity. Right? I mean, any Fed can and does talk a big game about restoring, financial soundness to money. And then when shit actually hits the fan, immediately just start printing.
Yeah.
Yeah.
So we'll see what Warsh does, but
what happens if they start printing this time? With inflation where it is, where services expansion where it is, it'd be so much worse than even COVID. Like the inflationary follow up.
Yeah.
Yeah.
The impulse.
Well, I mean, even just with the not QE that occurred, the buying of 400 billion in assets, which was not QE, definitely not QE, had to be done. It doesn't do anything, but it had to be done. I mean, look what it did to juice things, right? So
yeah, and I think that's the trouble we've got now, though, is if you did get into a position where you had to do more printing, it's going to become that much more detrimental and that much harder to even pull back. And you get to a point where I would assume, there is no coming back from hyperinflation.
at the same time, there's nothing else to be done. There's nothing left, right? I mean, they can't even raise rates anymore.
What better than the
unless
fall of the Weimar Republic to give way to
unless they're willing to
Nazism?
raise rates high enough and swiftly enough to break things, raising rates will also be inflationary because the Treasury and the Congress have shown that they have an infinite propensity to run deficits, and no amount of financial trouble will dissuade them from that. Right? They are playing a game of chicken with the Fed, saying you need to buy it, and the Fed saying you need to cut spending, and neither side is budging. Well, the side that has been budging so far has been the Fed. So now we're at a point where if we don't reduce the spending and the Fed raises rates, they're just going to increase the spending.
Yes.
Because of the interest payments. The Fed basically dropped the low end down to the average rate. Like 3.5-ish is about the average rate that we're paying on all of our outstanding debt. And so if they raise rates at all from this point, those interest payments go up. And if we don't cut any other spending, the spending goes up, the deficits go up. And so if anything, the Fed lowering rates might actually be better, right? Because you reduce the deficit spending. But the problem with that is that you also free up some of the non-marked to market losses that people are sitting on. And they're also in this game of chicken, and they're not backing down to the extent that they can. And so if you free up their ability to lend and lever more, they will. And so the Fed really doesn't have, like, the interest rate lever is no longer an effective tool for them to actually change behavior, because nobody is willing to change their behavior, because they all think that, well, they always cave first, so they'll cave first again, right? And however, I think that the big lever they do have to pull is what they're sitting on, right? Actually tightening by selling assets, or at least I kind of think letting assets roll off is kind of neutral. But if they actually sold assets, whew, that would fix a lot of issues real quick.
Mm. Yeah.
Yeah, I think it's funny. So Jay Fresh's dog once again wants to participate, so he might have to go get his dog. But I think, back to, which it looks like that's what he's doing. But I think, like, to kind of throw this back to some of the crypto boys, that's been kind of one of their leading things, is that fiat currencies typically don't last that long, right? And so there is some level of, I think, yeah, you can maintain stability and good policy the first
Oh,
few
that's in the
years.
pound?
I mean, yeah, what's the pound at as far as fiat duration? I don't think has anything gone over. Yeah, I'm gonna have to check that up.
1,200 years.
Really?
Yeah.
But has it been fiat the whole time? Let's see. About 55 years.
Yeah. 95.
Yeah.
Yeah. Banned in the gold standard September 1931. But the pound sterling, 1,200 years.
Yeah. And I think, like, that's kind of just where you get into a problem of, certainly the first 50 years, you can do it, but then it becomes definitely a little bit easier to start printing and trying to get around ways that you can pull levers. And so, not necessarily saying that I'm completely on the side of crypto, but I can also understand where some people are looking at it saying, well, yeah, compared to some of these other currencies,
The
maybe
problem
there
is
is
crypto
some
is
of that.
not a currency.
Yeah.
Yeah, I mean that's
It doesn't meet the bar.
I
So crypto is not
I'm
the
in
solution to the problems of fiat currency.
right. I'm in complete agreement with their their overall thesis that there is not sound money. Completely agree.
Yeah. Well, there's gold.
We're on the same page, right? Well,
We still have
okay.
gold.
Ugh. The problem with something like a Bitcoin and why it's not a solution is that the only thing I can buy with Bitcoin is the unsound money. And so it is only worth, what the currency that it is priced in is worth, right? It's yes, like the ratio of the two changes. But if you actually had a liquidity event where people wanted to start using Bitcoin as a replacement for cash, it would crash because you can't buy you can't buy a head of lettuce with Bitcoin without first converting it to another currency. And so if people were actually going to try to use it as a currency, it would crash.
I think the problem with it too, just kind of giving credence to a fiat currency, is that when there is a growing population like we have, and you do have presumably growing value and growing worth, there is a reason why you want to give people something to spend, right? And so like a stable 2% inflation target is enough of a reason to say, go out, spend it. But the problem that you get with crypto is if it's deflationary, there is a certain tendency just to say, well, why should I go out and spend? And if you're not going out and spending, you're also going to cause issues with the economy as far as you're not going to see services. People are going to say, nope, I'm just going to sit on it for the next year or so and hope that it'll be worth more by then, especially if I don't need it. So there is value in a currency that is inflationary. And so I do want to kind of throw that out there too.
Yeah.
Yeah, I mean, I'll just say the real solution to a unsound fiat currency is owning things people actually need.
Yeah.
You
Own
mean the
real
full
things,
faith and
not
credit of the U.S. government isn't just our giant pile of commodities?
well, go own those.
We do.
Well, I'm
The
saying
dollar
you
is a
own it.
representation of that.
It's also a representation of all the liabilities that come with it.
Yeah, of course.
Speaking of liabilities, I think that's a good transition into our next
Jay Fresh
topic.
looks so angry at me right now.
Well, you're being mysterious and you're trying to do like the mystery dunk.
I'm
And
not.
I don't know. I don't think I'm emotionally in a place to get them receive a mystery dunk live on air.
I'm sorry.
I'm just waiting to hear about the mountain of strategic cheese that's buried somewhere.
I don't think it's good anymore. Well, maybe it is. I don't know. That stuff was basically plastic.
Yeah.
Yeah, it's
It's
definitely
just
good.
it's just in your balls. You got it from your parents who ate World War II cheese.
it's
I know.
it's in all of
It's
our
next to the
balls,
pea.
and it's in the Pacific trash island.
Which now has its own ecosystem and we can no longer tear it up. Like we can't get rid of the trash island because it's supporting its own unique, diverse ecosystem and possibly growing bacteria that eats plastic, which we need to figure out.
Life finds a way.
It does. It
Yep.
does. If there's an energy molecule or energy to be gained from breaking a molecule apart, you can bet a single-celled organism will try to do it.
We'll accidentally do it given enough trials with randomness thrown in. Yes.
Yeah. There's bacteria like on the elephant's foot in Chernobyl, right?
That's true. Yeah. It's either bacteria or fungi, I want to say. There's something that's that's actually living with it.
It's chilling there, eating up the gamma
Yep.
radiation. Yep.
All right. Tariffs.
All energy is a snack. That should be the first rule of the universe.
Yeah.
One day we'll all.
Still looks
one
like he
day,
hates me.
I just don't really know what to say to that. It's like the scat fetish thing. But
I think you just have to
Yeah,
throw
I mean-
a bone to all the extremophile organisms out there. They're
I
figuring
mean, one
out
day
a
we'll
way.
all perhaps be eating gamma emitting egg rolls.
Gamma roll?
Now with enhancements.
GammaStrike.
GammaStrike. Yeah. Should we take a moment to talk about how GammaStrike got incrementally better today for a select group of subscribers?
We can maybe talk
Ooh.
about that later, but
Yeah,
we should
let's
get
do
through
it after the break.
I know. I just want to tease them.
Oh, there you
I
go.
knew we weren't going to talk about it right now.
I like it.
Yeah.
I've already gotten requests for another roundtable, though. It might be time to get the boys back together.
No, they're not getting a roundtable until we do a prod release.
Yeah, that's what I told them.
We're just it's just mystery colors for them.
But the
until-
beta's gonna go. The beta's gonna go so well that prod release is gonna happen any day now, right?
I've gotten a request to transfer someone from regular to beta, but we can't do it.
Oh, not
We
even
can't.
by selling a soul or something?
No, there's no way. The
Were they
permissions-
around for the initial beta offer?
No,
Oh, that's
no.
that's rough.
They were willing to continue paying the regular rate. They just wanted beta access. But we have no way of doing it because all of it's like grandfathered back in the permissions to a point where like we'd have to create a whole nother environment to allow that to happen.
No, we could probably do it. I don't think it would be.
I don't
that
know.
big of a deal
Nuke
at
made
all.
it sound impossible.
Well, that's his job as a dev to get out of doing work that he doesn't want to do.
I know.
He played you like a fiddle, boy.
Did he?
I think so.
Hmm.
I think we just chalk this up to beta. Those guys are becoming that much more valuable and that much more awesome. So if you've got your beta status, keep it. You're awesome. And we love you guys.
Yeah.
They did make all this possible.
Absolutely true. All right, let's get to the tariffs though. What's going on there? What's even like I know there's stuff going on with Canada, but
Mhm.
I'm also hearing about all the refunds. Am I going to get anything from that? What is the ultimate story that's going on
Well,
here?
we've been so distracted from the Epstein files by the Iran war that we also forgot about the original distraction from the Epstein files, which was tariffs. And in the background of all of this, the tariffs have been rolling off and they've been refunded largely under the original IEEPA conditions by the Supreme Court. Not to us, of course, but we'll get to that in a second. And so, Canada's tariffs had started to roll off and were due to be replaced with the new rule tariffs. And so President Trump sat down with someone literate and attempted to negotiate the way he does, and that person said fuck you right in the ass,
As one
and
does.
whatever tariff you charge me, I will charge you the same. And that's where we stand with our largest trade partner here on the same continent as ourselves. And so, yeah, Canada tariffs will be jacked up to whatever insane rate that Trump has promised. And then he will immediately pull that back next week as soon as stocks dip because of it. And then he will announce that he is giving them more time to negotiate. And they're totally going to find a deal in the next 2 weeks.
What impact will this have on the importation of quirky, fun, and cute male Canadian actors? Because that's all I think most of us care about.
I
don't
think
think male-
they're under a special class, right? Where there is only so many quirky Canadian male actors, right?
Aren't they just residents of Hollywood?
Well, now, because we
Oh.
imported them.
Yeah, they may
I
have been
see.
naturalized.
I see. Do you think they were actors before?
I don't
Ooh,
know.
Some of them. Ryan Reynolds, good example. He was doing a lot of stuff up in, think British Columbia and Calgary and all that when he was really young. So there is that. But what I've heard specifically, so for those that are wondering, I'm drinking some bourbon, and I know that there's a lot of Canadians that are just like, I'm not buying American whiskey anymore. And that's been kind of largely echoed across a lot of the provinces of Canada at this point, where they're just like, yep, we're just going to drink our stuff. And so there is definitely some impact there where I think in the US, like we've also just seen with consumer interest in bourbon and alcohol, it's going down, right? So now you've got a lot of producers that have too much, and that's actually causing a bit of a crash to occur in like some of the spirits markets as well.
Yeah, that's well. Also, like all of Gen Z would rather smoke weed.
Yep.
That's a thing too. So now
Totally.
all the red states need to make weed illegal so they can boost their moonshine trade back up again. But I mean, that's where we're at with Canada.
Yeah.
And then globally, we have some tariffs in place. Some have been pulled back, as I mentioned, under the Supreme Court, and that those tariffs were ordered to be refunded. Most companies are just taking that into their balance sheets, and we're seeing it in earnings as these big cash surpluses, which are going to fade in the next quarter when they no longer have the money being paid back to them for the tariffs. But I will point out that the people who really paid the tariffs legally were the companies. They imported the goods and they paid the fee on that. Now, they then jacked up the price of all those items equivalent to the tariff that they paid and charged that to us. We are not being refunded as a population anything. Fuck all, jack shit. All we've done is give corporations billions and billions of dollars again.
Wait, I thought I heard Walmart said that this next quarter we were going to start seeing lower prices off
Oh
of
yeah,
these
they're
refunds.
using their tariffs to discount their prices. If you shop at fucking Walmart, what if you don't shop at Walmart? Then you don't get your tariff money back.
All right, Mr. Moneybags.
I don't shop at Walmart, but
When's the last time you were in a Walmart?
2 weeks ago.
Wow. You
I'm
shop at
impressed.
Walmart more than I do. I don't like Walmart. Too many beeps.
I
Too
was in
much beeping.
Costco yesterday, so
Oh yeah, Costco all the time.
yeah.
Yeah.
Costco.
So
pretty cool.
So when it comes to the history books, where is this actually going to end up? Like all this tariff activity, was it a huge mistake or did it really just help transfer the wealth in some different ways? Or what are your guys' thoughts there? Like what's
Well, it's
going to be
done
the
everything the Trump administration aims to do, which is concentrate the money at the bottom and then push it up towards the top.
Mm,
Yeah, which it's already done. It has
Yeah.
already done that. It has pushed up hundreds of billions of dollars towards the people who need it the least.
but now
That's
we've got a
that's what
K-shaped
tariffs have done.
economy. So it's all good.
Whoa, hold on.
Well,
That's
I mean,
treasonous.
Oh,
retail this quarter. I mean, Walmart missed, right?
Yeah.
And a couple other folks.
Walmart's
were
earnings
pretty
actually weren't
lackluster.
bad.
Yeah, but they still missed, right? And I think
Did
that's I mean, that's the counteract, right? Ultimately, the consequence will come when the consumer starts to get tapped out.
I'm fairly certain
enough
they
that-
beat. Yeah, they did.
D-
They beat on
Yep.
they beat on earnings per share by almost 10%.
Yep.
And they beat on revenues.
But I think they missed the whisper because didn't they go way down after their earnings?
They did. They dropped like 10%.
Yeah, because they missed the whisper value the whisper numbers.
Yep.
No,
S-
it was because they very openly stated that the consumer has been pulling back due to higher energy prices.
Yeah, I feel like they've said some flavor of that for a while now.
This was pretty direct.
Walmart's kind of like the Jamie Dimon of retailers. There's like kind of perma bears that always tend to do okay. They always kind of say like, "Up, things didn't look super great in this thing or that thing, or this looks like a future headwind," and then they do fine.
They've got
Jamie
the
Dimon's
fortress
always
balance
just
sheet.
like, yeah, Jamie Dimon's always just like, we're due for a big reckoning in 6 months, and then it's fine. So, yeah, I don't know. So, I mean, it's just like, how much do we really care about forward guidance? I don't know.
I think the thing that is unique with Walmart, though, is as far as they're everywhere, right? They've definitely beat out a lot of competition in markets, and so they're kind of that lowest common denominator for where people have to shop in many areas, and so they know what they're doing, right? And I think to your point of kind of Jamie Dimon with kind of that fortress balance sheet, they're at least signaling that they're preparing for that slower sales pullback from the consumers. So I think that at least there's that transparency there, but yeah, still concerning.
But yeah, Walmart et al., thank you for your money. They're very thankful that throughout the tariffs, you did not curb your consumption and that you ate the higher prices and are now getting none of it back.
Woo!
It's pretty exciting stuff from a corporate standpoint. Like if you ran a company and I was like, hey, if you double your prices, your customers won't buy any less.
Because they have few other options.
They have
Because
no other options.
Yeah.
there's monopolies
'Cause-
everywhere.
Well, I mean, Walmart especially, right? Like there's just like there's so many parts of the US where there's only a Walmart. Walmart made sure of that. Well,
Oh, yeah.
maybe there's also a Buc-ee's.
Wait,
And a Dollar
Dollar
Tree.
General. They're the
Yeah.
main one.
Dollar General might actually be worse now.
And a Casey's.
Yeah.
Yeah.
That's very regional, just like
Yeah.
Buc-ee's.
Although
Casey's
our
is a little
listener-
less regional. I think Casey's literally just tries to find towns where their population's like under 500 and they build there.
that seems a check. Although I'll admit, I haven't actually been to a Casey's. I haven't been far enough in the Midwest to really enjoy it, so I need to.
Does one enjoy a Casey's? Is that something people do? I don't
If
think
you
so.
like 40-old microwave pizza
I've heard some people do.
with
So
trucker ball sweat wiped on it.
Yeah, I've been to my fair share of Casey's. They're definitely middling. I wouldn't say anybody goes there to enjoy anything. It's not like Buc-ee's where people are like religiously frantically going there. Like there's no rush at Casey's like there is the Buc-ee's rush. It's like I don't know how many times I've walked into a Buc-ee's and been like, why are there so many fucking people here?
yeah, I tend to prefer for those in the Northeast, Wawa. Like it's that right level of, for the most part, the food's pretty good. It's not something where you're gonna like go out of your way for it, but then you're not dealing with like the crowds either.
Wawa's much closer to a Casey's, yeah, than
Okay.
a Buc-ee's.
I don't even know what the fuck a Wawa is.
You haven't spent enough time around Philly, but yeah, that's probably a good thing in some ways for you.
Yeah. The only thing I've ever gone to Philly for is to buy a cheesesteak and then leave.
I'm curious.
No,
So
that's
where,
not true. I went to the Ben Franklin Science Museum when I was in like fourth
Yeah, I was
grade.
gonna say, did you not go see the Liberty Bell? What else is
No,
there to
I've
do?
never
there?
seen the Liberty Bell.
the Ben Franklin Museum, that place is cool. Institute. It's like a
I
science
took my
museum.
mom to see the Liberty Bell one time, and I still haven't seen the Liberty Bell. I
Wow,
didn't get out of the
okay.
car. I was just like, I'm gonna stay here. You go fucking look at whatever historic shit you want to.
Go look at the old bell, you old bell.
Wow. All right. I think we should probably get into earnings. What do you guys think?
Yeah, let's do it.
All right. So I think the big one we got to focus on this week is on Wednesday after
I feel like
close.
once a quarter we get this like it's like this earnings report, but there's only one company on it. And then we keep trying to like talk about other companies that should be on it, but they're not.
Yep.
Yeah. That's the same.
Do you think it's a coincidence that just this week NVIDIA made a big announcement that they are going to be jacking the prices up of all of their equipment by 15%.
NVIDIA?
Probably not.
Yeah.
Are they?
Yeah.
Oh. Wait,
citing
are they going to jack
citing
it up
increased.
across all of their pre-orders also?
Oh,
Like,
I don't fucking know.
oh, that'd be amazing. Because then people
Whatever
will
he
start
needs to do
pulling
to
their
beat and
pre-orders.
raise. Jensen beat and raise Huang, will beat, and he will raise, and you will like it.
What if he
But
doesn't beat enough?
He's definitely, you could definitely tell it's getting more and more sophisticated to achieve the same outcome as the number gets to be so large. You're definitely seeing a lot more instances of vendor financing and very
he can't even foot the bill on the vendor financing anymore. Now he needs Apollo and BlackRock to step in and carry the bags.
well, he's trying to do it in a very specific way because he's very aware of the public perception that people want to accuse him of being Enron, and he really does not want to be associated with Enron.
Why does he keep doing
so,
Enron things though?
Well,
point.
he's so in particular, the thing that he's doing is he's backstopping stuff. So, in the days of like straight up vendor financing of the .com boom, they were basically just saying, here's some money, give it back to us. They were acting as like the creditors. He's more being like, okay, I will provide my goodwill and I'll co-sign as a backstop in case things go wrong in the future, but you go to the bank or you go to the private credit and you take out that loan and I'll be here if things go wrong later. And so they're not like on the hook, so to speak. And it's funny because each one of these deals has different like requirements. So for example, like the big data center, I think that OpenAI and SoftBank are trying to float, the Stargate thing, which doesn't seem to be a thing. They're potentially backstopping that, but they're only doing it if it gets built. So it's like once completed, we will provide a backstop for this. So if SoftBank and them are able to dupe creditors into giving them a bunch of cash to start construction, but they don't finish it, they all just eat shit, and NVIDIA is not on the hook for any of it.
I actually kind of want to go a little bit harder on something that's happening. And you guys are going to hate me because I know we promised an hour. But there is a there is like a real like dangerous thing that's going on here, both with what NVIDIA is trying to do through their like new financing program that they're attempting to develop, and what Broadcom's doing with their recent announcement of like $100 billion in issuance.
I think it was 60, but yeah, a lot of fucking money.
No. 60 in senior debt. 60 to 70 billion of senior secured financing with $30 billion of junior debt, which they did not announce in the initial announcement.
God.
Yep. It's $100 billion package. They just didn't want it to sound like $100 billion. But we do know.
How do you think Oracle feels about that already being like $300 billion on the hook? Now they've got competition.
I mean, probably much better now that everyone else is also accumulating equivalent amounts of debt, because at least they got their debt in at a lower rate.
Yeah.
Right? Like feeling like the first person to the pig trough, you know? Yeah.
Yeah.
Getting the nicest bits of the smorgasbord.
Yeah, you get all the crust on
It's a
top.
fine pig. But Ew,
I would
gross.
like to, Ron, since you're here and the producer, I think this would be a great point in the video version of this to put a picture of a cute, refined piglet wearing rain gear.
No, I'm thinking we pull the clip from Deliverance.
Okay.
Wait, can we just pull the clip from Babe?
No, Deliverance hits harder.
Can we we could put Babe in like in a Wall Street suit and then have the old guy be like, "That'll do, pig. That'll do." No?
Yeah,
All right. All
it's
right,
going.
fine.
We're going Deliverance.
It's just darker. You're so
Squealing
dark.
like a pig. It'll be fun. Everyone will enjoy it who's old enough to get the reference.
What about Lock, Stock, and Two Smoking Barrels, where he describes how he feeds people to pigs?
That's a good one.
It is. It's not bad. He's a better actor too.
Actually, though, wait, wasn't that that's the other Guy Ritchie film, isn't it? It's not Lock, Stock, and Two Smoking Barrels. It's
Oh
the
no
other one.
no! It's the one with Brad Pitt.
Yeah.
Shit. Where he's like a, I don't know. He's like a caravaner. They don't really. They just make fun of his language and the fact that he says "dag."
Dags. Do you like dags? Dags. What?
Yeah.
Sounds like Irish. I'll allow it.
All right.
Oh, dogs. Sure. I like dags.
So what was really interesting about what's really interesting about both of these private credit structures that Broadcom and NVIDIA are trying to set up with people like Apollo and Blackstone and BlackRock, is that the Broadcom program started with like $35 billion in financing for 1 gigawatt of Anthropic compute. And it was designed to fund 20 gigawatts more through 2028. And Apollo described the initial structure as committed capital drawn over multiple years, with private credit and bank capital funding infrastructure backed by contracted compute demand. So this is like a bifurcation in the private credit market, right? The leveraged, like, middle market private credit borrowers, right, are not doing well. We are seeing more payment in kind. We are seeing huge amounts of non-accruals, and the originations are slower and the underwriting is tighter. Meanwhile, we now have these like AI infrastructure vehicles with long, quote unquote, long-term contracted cash flows. And these businesses like Broadcom and NVIDIA are guaranteeing sponsor support for the purpose of some of that risk. So the special purpose vehicle they're designing is doing all this work. Instead of lending 70 billion directly to Anthropic or putting the entire obligation on Broadcom's balance sheet, you're isolating a pool of servers and contracts and cash flows inside an entity, and then you're financing that entity in layers. So senior lenders get the first claim on collateral and the payments, and then junior lenders, get more yield, but they take on more risk because they don't have, a claim until much later on any of the actual collateral. And so Broadcom gets to pick and choose the specified pieces of like performance risk that they're exposed to. And that makes, it possible to finance, $70 billion in unsecured debt. But it's really weird that private capital is trying to set up these systems to manufacture AI credit at a sovereign level when our own government is offering 3% real yield on inflation over the next 30 years.
So I have a question. Why does this sound a lot like mortgage-backed securities and their tranches?
Ooh, I haven't gotten to that part yet, Ron, but
Yeah,
you're right.
I was about to say, so they're
Okay.
taking the collateral
Hold
and
on,
they're
hold on.
obligating
I've
it
got this
to
all planned out.
Okay.
I've got it all planned out.
Okay.
So the actually just mapping them like one over the other is very straightforward. Anthropic's compute payments are mortgage payments. XPU's servers and associated contracts are houses. And XPV is the mortgage trust. So junior capital absorbs all the first losses, and then senior lenders get the priority claims, right? And Broadcom's like payment and residual value like support function as like credit enhancement, but not in a legal way, right? And that's effectively like a monoline guarantee or like CDS protection. And so like the confirmed platform launched with $35 billion, right, on a multi-year draw, with a goal of 20 gigawatts of compute over the next 2 years. But the waterfall and like guaranteed terms come from the deal reporting. And so like what happened in '08 was that like leverage existed at several levels simultaneously. Okay, so a little backstory before I go on. And so homeowners were highly levered. Junior tranches opened to support much larger senior tranches. And then MBS were repackaged into CDOs and CDO squared structures, right? And then dealers and SIVs like borrowed overnight through repo and like commercial paper to own like supposedly long duration AAA assets. But like the tranching alone doesn't create aggregate leverage. It just reallocates the loss. So the explosion like in '08 came when investors like borrowed against those tranches and synthetic structures and replicated the same exposure to the same underlying mortgage repeatedly. So like little repo haircuts ended up permitting enormous amounts of dealer leverage. And then when haircuts rose, that forced liquidation. So XPV already has the first 2 layers and potentially the third through the guarantees. So far, there's no fourth leverage, but there's no way that they're going to get this quote unquote asset and not use it to finance other things while they wait for repayment over, 30 years.
Would Masayoshi-san leveraging ARM to fund OpenAI and then leveraging his OpenAI shares to get more margin to fund? So he's leveraging his ARM holdings to fund OpenAI, and then he's leveraging his OpenAI holdings to fund more OpenAI. And now OpenAI and SoftBank are leveraging that to try to build data centers backed by, supposedly somewhat backed by NVIDIA and other people. Is that 4 layers?
Yeah, that would be. Let me try to give you like an example of how the like embedded risk in this works. So if you have a $70 billion vehicle, right, and it contains $10 billion of subordinate capital, so like 60 billion senior, 10 billion subordinate, right, 70 billion total. A 10% impairment will destroy 70% of the junior cushion. So Broadcom's guaranteeing that they can protect the senior paper, but that doesn't eliminate the loss. It would just transfer to Broadcom. And that creates wrong way risk because the guarantee would probably be called like precisely when like AI demand and chip values and Broadcom's own like balance sheet was weakening.
Right.
So the big difference is like the funding. So, I would say between like this and '08 so far is the funding. Like losses would emerge through impairments and defaults rather than like margin spiral. But the margin spiral layer is going to be added because nobody is going to put $70 billion into a vehicle and then not go like out and be like, well, I have $70 billion of this to somebody who's loaning them money. Right? It's not like they're going to keep that off their balance sheets or off their book. They're going to say, oh, well, this is paying me out this yield over this time, and I want to use this as one of the assets that I borrowed this money on. And the second that happens, the fourth layer is already there. So this is kind of like the telecom, like vendor financing of the early 2000s combined with like the MBS credit engineering.
Oof.
Oh, good.
And it's like they took the worst two financial crises in the last 30 years and they mushed them together. And so like residual value assumptions are going to encourage overbuilding, and that guarantees that everything becomes not only highly correlated but highly concentrated. And then the lenders are all going to re-lever the senior paper that they're sitting on. So
here's a question. If we're truly sitting on all of this demand, just unprecedented demand for intelligence factories,
yes,
so much so that everybody is racing to get as much capital as they can get their hands on to be the ones who get to control the future cash flows of all of this unprecedented demand. Why don't they just raise the price of the compute? Wouldn't that be a lot easier than...
so you're saying take the product that everyone uses for free and then charge people for it, expecting them to continue using it.
Yes.
Like drugs. Like hard drugs like fentanyl.
Or, I mean, if we've got these companies telling us that they literally don't have enough
Sam
compute.
Altman is giving me a taste?
No, what I'm saying is that they're all supposedly complaining about the fact that they don't have enough compute to serve all of their existing paying customers. And so they have to throttle and ration intelligence. Sorry, they're not tokens, they're intelligence, quantized intelligence. Instead of rationing it, why don't they just charge more?
Well, you see, what actually happened is they about like 8 years ago, a bunch of engineers in a room together created a way to search a database with a random number generator. And then a bunch of social media guys were like, hey man, there's nothing the human brain loves more than not doing shit. And so then they were like, well, what if we take our database search algorithm that you can just type commands into, and then we give it to people so they don't have to use their actual brains? Do you think those people would become addicted to that? And then the social media guys were like, yeah, fuck yeah, they will. And they're like, we should sell that to them. And they were like, well, not right away, because they won't pay for it up front. You have to give it to them for free for a little while. Then you charge them. And the human brain likes doing things so little, it's even willing to do those things incorrectly over and over and over again if the reward is not having to think. Because thinking is calorically intensive. It's why I didn't blow up to 400 pounds despite not moving out of my chair for 5 years.
Are you saying that you have an intelligence factory in your skull?
I do. I was born with it. We all are. Some of us have better ones than others, but most of us don't use them.
How many miles of fiber optic cable do you have in your spine?
Oh God, I don't know.
I don't know.
I don't know the answer to that. That feels like a
I was
trivia
just-
question.
Well, I just feel like every time
enough to reach the moon.
I think that's your
sounds like the
intestines,
answer to
I
that.
don't know. No.
It's like
But I know like NVIDIA always mentions how many miles of cabling they have in their racks.
That's important.
All right.
And it's like
other
enough to
earnings?
circle the globe or something.
That's to pump the stock of the company they buy cable from, that they also own
Yeah.
part of.
I will say, related to the discussion that we've been having, is that on the same day as NVIDIA posts earnings for the entire market, Salesforce is going to post their little earnings. And Salesforce is notable, not because of anything to do with Salesforce, but because I'm going to get this wrong. I think it was the CRO, the Chief Revenue Officer of OpenAI, left Salesforce to join OpenAI.
Ooh.
And made all these claims of like when she went there, she'd never seen an organization with more dedication and vibrancy and all these wonderful glowing things. And then, right as about 8 months later, right as it seems like everyone's freaking out that
We have
Anthropic
kombucha at the GammaStrike office too.
That's true.
right.
It's effervescent and probiotic.
Yep.
Right as Anthropic is about to do the drop on their IPO, she leaves and goes back to Salesforce.
She just couldn't handle the paradigm changes and efficiency that OpenAI had. That's my bet.
I just cannot imagine how that is not a nothing burger. And she's not even the first one to jump ship after such a short tenure.
Did she find someone in the Bay Area to give them her house for her shares?
I think she's basically not. I mean, I would have to imagine she left some unvested shares on the table.
God. Those are priceless.
Also, did you know that OpenAI recently did
Like a
a stock sale? Or sorry, it was a internal stock sale. They bought.
Wait, did
like
they get
8
money
billion...
from their own employees?
No. They allowed their own employees to sell them stock. So it was a stock buyback, but it was an internal stock buyback.
Interesting. And where did that is fucking weird.
It was like $6 or $8 billion. Yeah.
Oh my God.
Wow.
They're bailing on the ship before they even IPO?
They're trying to keep. I think they're trying to keep
Wait, how much
people
of
from
Sam
losing
Altman's
faith.
stock did he buy back? Whoa, hold on. Of that $8 billion, how much did Sam Altman buy back from himself?
See, here's the thing. And I don't think a narcissist would ever do that.
Yeah. They would only accumulate more.
I think they are just basically. I mean, it's kind of sad, but I also.
What if Sam Altman wrote himself like 30 options for stock and then bought back 3,000 of his own shares?
I mean, I guess, yeah. I mean, if he did it, that would be super, super bearish.
If only these companies weren't completely private and they had some sort of, I don't know, like transparency.
Yeah. Well, I mean, SpaceX AI showed that even with transparency,
You still
mongrels
make no money.
will eat the slop.
That's true. Yeah. They were pretty honest about not making money.
Yeah, their FCOs were quite good this last quarter. Free cash outflows were huge.
Thick. Thick. And that is the bar for an American business. Is
so
how
here's
much
the dichotomy.
free cash can you outflow? That's supportive of the economy, JFresh. That's what
I've
a
heard
business
that.
is supposed to do.
Yeah.
They're giving
mean,
back, like taxes, but not for the people.
It's investing in the
So
community, right?
here
Well,
is
sure.
where I think things get fun. On the flip side of OpenAI clearly having issues with their IPO prospects, which means their financials are probably finally starting to look so much like dog shit that even their closest insiders are like, God damn it, we might be fucked. On the flip side of that, and also I think it seems like with them delaying their IPO for so long, saying that they'll do it in 2027, assuming they do it at all, probably is because they went to investment bankers, right? Keep in mind that like an IPO is a sales and marketing exercise, right? You go to banks and you say, all right, I want to sell stock to the public. You need to line me up some buyers and you need to make this market for me. I need to know what can I get for my stock? I need these buyers lined up, and whichever bank makes the best pitch and says, here's what I've got for you and here's what I'm going to do, you go with that bank. Or if you're really big, like I think SpaceX AI went with a few banks, but you basically you 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 price it out, right? You send out a request for services, and the only reason at that stage you wouldn't go forward and just get your IPO going, right? Because remember, they submitted their S1 to the SEC. The only reason you wouldn't continue going forward
I
with
thought
that,
Dirge got rid of the SEC. Do they still exist?
no, they still exist.
What do they do?
Nothing.
Oh, so it's the same.
Yep.
Yeah.
But fewer fines, right?
Probably.
Yeah, they do less than they did before. That's
How many?
Yeah.
I wonder. Can we look at the historic average of SEC fines per administration and see how much they dropped since 2024?
I don't know. Anyway, the only reason that you wouldn't go forward with the IPO after dropping your S1 with the SEC and after courting all the banks is if the banks came back to you and said, we can't get you that much money. We can't drum up that much interest for your IPO. And remember, their last round, they were valued at over $800 billion. And so they've got to get at least $1 trillion to make it worth it. So it makes me think that they're struggling to get any return over the last round. And that is not a good look for them. And on the flip side of that, you look at Anthropic, who just recently there was something that they leaked that suggested that they were going for like a $2 trillion valuation for their IPO that they're going to try to do potentially within the next few weeks. And what's the primary difference between what Anthropic has been doing over time and what OpenAI has been doing over time? What is the one critical difference between the two of them?
One's a 501c3 charity.
Elon Musk.
Oh,
Because what did XAI do very recently? They sold a ton of compute from their data center that they're losing shitloads of money on because they built it, and it's like, why'd you do it? They sold basically that entire capacity at a steep discount to Anthropic. So then Anthropic can come around and say, for this quarter and this month, right after they did that deal, they released something that said, hey, we're cash flow positive for the first time ever. I think operational profit or operational margins were positive for the first month ever, but with an asterisk that this likely wouldn't continue into the future because they probably took that big discount and applied it all right at once to make it look profitable so that they can make their books look decent enough to shove this shit into the IPO before everything started looking worse, just like XAI did, right? They shoved, XAI into SpaceX, and then they did all this, financial engineering, and then there's the Elon Musk bubble, the Elon Musk effect that just makes people lose their minds and open their wallets. But all of that to say is that Anthropic might pull it off.
You think so?
I mean, it's not a
They've gotta
guarantee,
hurry.
but they've got to hurry,
Yeah.
right? And they're pushing for a few. I mean, they're trying to get it out as fast as possible
Before the end of this year.
Like I said, I think they're trying in the next few weeks.
They have all of everyone's money to do it.
So it will be a very interesting quarter for sure. I'll be very interested to hear how Jensen Huang getting his beat. Probably not. I mean, as long as the credit keeps slowing, getting the beat's fine, but getting the raise is what starts to get interesting, because now you're starting to get to the point where equipment's depreciating as fast as they're buying new equipment. And you're constrained by power and other infrastructure, and so there's nowhere to put more chips. And so I think that's probably partially one of the reasons why he's raising prices. Of course, also he's passing through costs of RAM, but I think part of it too is also because his total chip count is going to start slowing down, so he needs more per chip. But anyway, that's kind of what I'm looking at over the next few months, is how this plays out this week and for NVIDIA earnings. If Anthropic can get their IPO going fast enough before it all blows up, and how long OpenAI can continue to limp along till someone tells Sam no. I mean, people have been telling Sam no for a while, but Masayoshi's son just can't say no to his baby boy.
Oh, hey, that chart looked exactly the way I thought it would.
Which one?
By administration with SEC fines.
Well, I could only go back to 2005, but yeah.
Okay. Straight down.
Nice. Straight down. Love it.
That makes sense.
Everyone's just complying, Girk. What do you...
Yeah. More rigid fiscal policy. Everyone's just all on board with it.
Tell me all about your rigid fiscal policy, Ron.
Nah. All right, let's cut into the calendar before we do the break. Last week, was there anything we want to call out?
Not really. It seemed like I don't know. Everyone seemed to kind of think that the jobless claims or the job numbers were one of the reasons that Thursday did a little dumperoony. But
that's horseshit.
Yeah, they looked fine.
All right, want to go on to this week? What are we looking
Maybe it
forward
was
to?
just because bonds shot right the fuck back up again.
Yeah, probably. All right, so this week, we do actually have some things this week.
Did we? I thought it was just like PCE.
Yeah.
This week's interesting, though. A little bit. Last week, we don't care about, right? The Fed was more hawkish than everyone expected them to be.
Yep. But we do have the Jackson Hole Symposium coming back up.
Nope. Jackson's Hole. We should send Dork to do live reporting from Jackson's Hole.
That'd be fun.
I don't think there's anything else on here really other than, I mean, yeah, so the Warsh speech at Jackson's Hole could be serendipitous. I don't know. Considering that it was Jackson Hole that kind of started off all this, interest rate cockamamie. But no, I think this week all eyes on earnings and all eyes on the treasury market. I don't think calendar's really going to do much.
Cool. All right. You think we should hit to a commercial?
Sounds good.
All right.
Yep.
We'll do that.
Well, hey there, stranger. If you're enjoying this podcast, be sure to check us out on our socials, where you can hear the latest about Vol Stars and GammaStrike. Check us out on X, Blue Sky, and Reddit.
And we're back from a riveting commercial from Ron. Thank you, Ron. So now is so once again, we do have a segment, Trading with GammaStrike, where we talk a little bit more about the platform that we have been working on for quite some time. But that is still on summer hiatus. When did we say we're planning on bringing that back? It seems like people are starting to filter back in from summer break.
After Labor Day, we're going to come
Labor
back with
Day. Okay.
Yep.
So we will bring that back after Labor Day. Until then, we will move on to audience questions, of which we have.
Wait, hold on. I did want to say one thing about the calendar for this week.
You may say one thing, but say it quickly because
very interesting. So we have NVIDIA earnings Wednesday, and we have nothing that's important between now and NVIDIA earnings. Like PC, no one gives a shit about unless the core metrics are off, right? So like everything's just banking on like a whole dispersion trade, just banking on NVIDIA earnings right now. And then after those are disappointing, you have Jackson's Hole. March is going to be live from Jackson's Hole. And we have the non-farm payrolls revision.
I did see the revision. I was like, oh, I love revisions.
So what a great time to short equity vol.
No.
Right? No, what? That's the best setup ever. Like you literally get a long vol all the way into NVIDIA earnings, and then you just short the fuck out of the vol and buy index vol. Because nothing.
Okay. No. Yeah. I was thinking just the same old. Sorry, when you said equities, I was assuming index
correlations at like 7.
Yeah.
There is no more equity vol to long.
Well, it was funny because one of the first things I thought, because everyone shorts equity or index vol so much, and indexes are an index of equities. You said short equity vol, and I was like, why would you do that? Wouldn't it make more sense to short vol on NVIDIA and go long vol on SPX?
Same thing. NVIDIA is an equity.
Yeah. I
don't know.
My brain
has already been getting shorted into the dirt for like the last week.
My brain has been melted by all of the 0DTE selling that occurs.
I know.
Every day I open our brand new tool that we've just released for beta users, which we're very excited for, and I just see all of the sold options.
All of them just sold all the time.
And then it gets even more sold, and I'm just like, well, I didn't sell a fly today, and I'm just not going to, because there's no more meat left on that bone, and nothing's going to happen.
I have an AI song for this when it becomes pertinent.
Thank God. Some heroes don't wear capes. Anyway, yeah. Could be an interesting setup. Okay. Let's get into, so we're going to get into audience questions. As our one listener knows, that you can ask us questions anywhere and everywhere on Girk's Trading Discord, on Reddit, on X, the Everything app, on Blue Sky, and Ron's
YouTube.
favorite platform, Truth Social.
I don't know about that, but
after 8chan went under, he just slowly, naturally migrated to Truth. No, sorry. Also on YouTube, you can just pop one in the comments. So give us a question. We'll try to do our best to answer it. And if we don't do a good job, don't assume that we don't want to answer it. We might answer it badly or whatever. You can ask it again, and we'll be happy to go back over it or ask it in a different way. All right. So first question. As the bond market outlook continues to deteriorate, what are some policy interventions that you think will be taken over the next 2 to 3 months from the Fed, Treasury, and Administration? And what policy actions were taken right before the GFC? And do you believe the administration will be less concerned about the economic outlook after midterms? Oof, a lot going on in this question. So the first part of it is, what do you think the interventions will look like? I'm assuming on top of the quote unquote bond twist that Bessent is currently croissanting. I guess it's more of a pretzel than a croissant. It's going for the alliteration.
Yeah.
Your guess is as good as mine. I mean, I don't think Warsh is gonna buy it, right? I mean, that's the big question: is Warsh going to absorb that short in debt? Because Warsh has allowed the buybacks to essentially stop, and so I think kind of the test here is like, hey, I'm gonna dump more on you. You're just gonna let me do it? Are you gonna take it? Or are you gonna fight back?
This actually, like, this is not an easy question to answer. It really depends on how we frame it. Like, it's like, are we counting the Treasury, like the Fed, as part of, like, the Treasury is already part of the administration, but are we counting the Fed as being the same as the administration? Because
No, I think they split it up because they're looking at them as independent actors, or at least
I mean, fiscal
actors.
dominance is all about administerial control over the monetary side of things. And so, like, I feel like Treasury administration, or it's the same thing, right? So it's like, what could the Fed do, or what could I mean, we all know what the Fed could do, right? The Fed can hike rates to the moon. That's an option. They can lower rates, or they can buy more bills, or buy more bonds, or buy
buy
more
nothing.
of both, or buy nothing. Yeah. I mean, the Fed's tools are very few.
The tools of the tools.
The tools on the board at the Fed don't have a lot of tools.
I do feel like the last part of the question, though, is crucial. Like, heading into the midterms.
We'll get there.
As far
we'll
as what can
get
Bessent do, there's quite a lot of things, and I guess
are there?
Yeah.
I mean,
there's a lot of potential
in the context of what Yellen has already done. Can he do more than like 10% of what Yellen's already done?
So I'll try to go from like the most plausible like idea here, I think, to like what would be like financial nuclear warfare. But yeah, Bessent has a lot of tools. So right, like these are already in effect and very plausible, right? He's doing larger and more frequent buybacks. He can increase those in size. He could run them weekly, so you can increase the frequency and the size of them. He could purchase newer benchmark issues rather than just like off the run illiquid shit. He can issue more bonds than he already is. And he could fund that with more bills, or with like FRNs, right? And that would be even like an even bigger operational twist than what already happened. He can spend existing TGA cash rather than issuing debt. So the TGA balance would fall, but and bank reserves would push up. He can push like fiscal consolidation, which, God, that hasn't been done in a long time. But it is potentially an option. He could like exclude treasuries and reserves from the SLR denominator, which like would open up more repo access and lowers SOFR. Because it lets like dealers like warehouse more bonds and
Can he do
prevents,
that, or does the Fed have to do that?
like treasury basis positions from unwinding. He can do that.
Okay.
FEMA repo. So like letting foreign banks borrow dollars against the treasury. Oh wait, are we doing that too? This is extreme, by the way. But yes, we are. We're letting Japan do it instead of selling their holdings for cash. So we're letting the BO we're letting the Ministry of Finance in Japan borrow US dollars against their treasury holdings rather than have them sell their treasuries currently. Which is hysterical. But we could do that with more countries. And that's good if the sell-off's being like amplified by foreign liquidation, which it is to a degree. But it doesn't do anything about domestic inflation. But it is an option. The Fed could increase its like bill and short note purchases to keep SOFR controlled. But that would have to be the Fed. Fed could like sell or allow short securities to mature and buy 10 to 30 year treasuries, which could leave their balance sheet flat, but it removes like.
They're already doing that.
Yeah, they are. But the more they do it, the more DV01 it removes from like private portfolios. So it lowers term premium. It kind of flattens the curve a little bit. It's much more effective than the treasuries buybacks. The Fed can create new reserves and buy treasuries outright, right? That's just straight up QE. The Fed can do like physical yield curve control. Like they can say the 30-year max is at 5%. And
oh my God.
and defend
which they can
it with
only
purchasing.
they'd have to purchase. Yeah,
they have to defend it. It has to be it very much has to be an unlimited and credible defense of 5%.
These all sound like variations of temporary and permanent forms of printer go burr.
And then like oil and geopolitical intervention would be at like the very top of that. So you can try to reduce energy driven inflation, like I don't know, surrender to Iran or something like that.
And short oil.
And short oil, yeah. But I mean, I feel like they're already doing everything here that they can do. I don't think I've named a single thing that they're not doing to some degree.
Yeah, they could just do more.
Yeah, with the exception of the Fed doing long duration QE, we've already been doing, we've been attempting to do yield curve control since Yellen. And so
I just want to say, there's a glaring omission from this question, which I think speaks volumes about the problem of our deficit and how we're thinking about it. They didn't ask at all explicitly about Congress. Like they're not even involved. But they are the ultimate source of all of this problem, which is they are spending more than they are bringing in via taxes.
Yeah. And SEC enforcement.
And so that ultimately, when we start hearing political, like folks from the administration and other areas of politics starting to put pressure again on actual Congress critters for spending, I think that'll be kind of a signal that people are running out of things to do. So I guess the next one is what policy actions were taken right before the great financial crisis? I mean, very few. That's part of the issue. And then do you believe the administration will be less concerned about the economic outlook after the midterms? I mean, probably. They only seem to be mostly paying lip service to it now, right?
Yeah.
All of the actual big actions that they're taking are economically terrible. So,
Yeah. Well, and I feel like just going into the midterms, there's a lot of just keep the status quo, whatever can be adjusted to continue it.
Yeah, I mean, I'm trying to think of like what they could do that would actually be like outside the scope. And like, I mean, obviously, these would like they're not actions that you would expect from the world's predominant economy or dominant economy. You would expect them from like third world countries, but like some sort of process of trying to change the monetary regime itself. Like, what if you like got Congress on your side and you could pass some sort of act that like turned prime dealers into like stable coin holders, and then like and then those stable coin holders would have to like they would be forced via not just like licensing, but like forced via the rule of law to fork over their cash in order to buy whatever like dog shit you threw at them at whatever rate you determined was fair. And then you got like the representatives of the United States like sign off on that because like they're legally invested in like a bunch of this like fake money that they suddenly want to like turn into real money. But like the eventual output of this entire system would be to take all things of value and make them worthless. Huh.
mm,
That's weird.
Does.
Yeah.
It sounds like there's too much accountability in there. I don't think it
Yeah.
will
No,
ever.
no.
Just remove the
No,
accountability.
no.
Yeah.
Yeah.
Okay, so this leads very naturally into the next question, which is if Bessent is buying back long-end treasuries and paying for it by issuing more short-term bills, isn't the Fed stuck? Cuts tighten spread on carry trade, inflation rips, and hikes screw Bessent issuing all this short-term debt. If their goal is to grow out of the debt, how does this play out? Or are they going with the other plan, next administration's problem? It's too soon for next administration's problem. If they're everybody's goal is always to grow out of the debt, and they would love it to be natural growth. The problem is that we aren't naturally growing. Our population is actually flat. Our employed population is declining. And there is, no evidence of any sort of technological breakthrough on the horizon that could get us out of this. I know a lot of people think AI is going to be it, but it is not. So yeah, it's going to come down to kind of what we were talking about before. He's going to dump more on the front end. Bessent's going to dump more on the front end, and it'll be up to Warsh to decide: am I going to take it, or am I going to tell him to kick rocks? And we don't know that yet. Maybe we'll get some clarity on that this week at Jackson's Hole. Next question: when? September.
I'm going to say October, just because, just to be different.
I'm just like whatever date JFresh says it's on, which has repeatedly been September 21st, not that day.
Yeah.
Yeah. I'm gonna just cover all the other trading days of the year.
Okay. Yeah.
Okay.
I just want to lock him into his committed. I like it. I've always liked September for a crash, but it really could just happen at any moment. We have so many We have so many fucking things stacked up at this point. It's just such a shit situation.
Yeah.
So the September estimate that he is proposing is drawn from the idea that leverage is able to hold all this shit together. And I will say that leverage has never been as great as it is now. It's the greatest. I mean, we're the greatest country in the world and we have the greatest leverage. It's very simple. But
does that mean we're going to have the greatest deleverage?
Yeah. See, that's the thing, is like, if leverage is going to hold it all together, then that leverage is like, it's very sensitive. I feel like it could start before the day before or something, just like right after the AM expiry.
Okay.
So you say September 21st. I want to say what is that? September 18th? Is it the 18th?
I just would like to, for the record, say that I have claimed the entirety of September. I've been using the meme of the song.
I know.
Which has created the fake news that I have claimed a specific date. There is a specific date mentioned in the song. That is the song, not me. Okay.
There's also a specific date that you think.
I also technically said a September.
Oh,
it could be any September.
Yeah, it's moving the goalposts.
No. When I say September, I never said this September. I said September.
Isn't it like historically more likely that something breaks in September and then we actually crash in October and then
yeah, we did that. Yeah, we did that through the he's 4th of July. The 4th of July episode. Yeah. Okay. Next question.
When we found out that the market bottoms had nothing to do
with when the market crashed. Also, what the long-term also, this is a continuation, I guess. Also, what are the long-term geopolitical impacts of having so many of our Middle East military bases damaged, and how it would impact the oil, bond, and equities markets?
It doesn't. No one cares.
No one gives a shit. It'll just ensure that we spend more money later.
And Burger King will make a little bit more money from rebuilding.
And if that one... Oh, another question. What the fuck is a woodchuck? Is it real? And does it live in Roanoke?
So I'm very prepared to answer this question. A woodchuck is real. They're also known as groundhogs or whistle pigs. They're a rodent. They're like a marmot, a large ground squirrel. Now, if you mean Roanoke, Virginia, which I know you don't, then yes, there are whistle pigs present in Roanoke, Virginia. The lost colony of Roanoke is found in North Carolina, and woodchucks have not been found to be present on that island.
Wow, I'm impressed.
All right, we need to do
I'm
a
aware of.
woodchuck
Although I did
episode.
very little actual research into that.
Can we just
because I assumed it would just be like if there was a woodchuck there, it'd be lost.
Related to that question, though, about the lost colony, what was inscribed in the tree? What was the word?
Whistle pig.
Whistle pig? No. It was Croatan, Croatan. And I don't think people have ever figured out that.
I do know the origin of the name of woodchuck. It comes from the Algonquin word woodchuck.
Oh. See? This is an educational podcast, everyone.
So it has nothing to do with chucking
wood or
wood.
checking it? No.
It's just us not being able to say a word like colonel.
Yes.
Yeah.
Great.
Or lieutenant.
Okay. Is Burry right or is Burry way early again? Yes.
Yes. Always.
Yep.
Always yes. The answer to that question is always yes.
GammaStrike questions. On the live page, is the Dex Gex calculated using the naive assumption or is it skew adjusted? It is calculated using the naive assumption.
Yeah.
If you are a beta member, you will get skew adjusted type values coming soon tomorrow. during trading. You can watch it on
if it
Geek's
works.
stream.
We don't know
If
if
it
it'll
works.
actually work.
You can watch it. Also,
Currently,
watch it
all
live.
of GammaStrike is a little bit broken. So
We
if
pushed
you're-
we pushed a lot of updates, so we'll see how it goes. Fingers crossed. We've got people on standing by, ready to put out fires as they may arise. Okay. Can you guys please explain the theory why single name stocks tend to bounce near Vega neutral? Because, well, I could tell you very basically, because right now everybody is trading dispersion, and dispersion trading is trading volatility, and it's trading arbitrage between the volatility of single stocks and the volatility of the indices that they are within.
also, it's very profitable to sell puts under Vega neutral on an equity. It's the point at which puts begin to price up relative to calls, and they become very expensive very, very quickly. And so the initial knee-jerk reaction of anybody who likes to sell volatility for monies is to sell that volatility while it's going up before you can get to it. Because if you get to it, then they make less. Unless there's like some fundamental reason the stock is diving below VN, in which case all of the puts you sold are going to get bought and you're going to get fucked.
Okay, next
Bankruptcy,
question.
for instance.
If NVIDIA earnings aren't the blow out the Ashen hole level of bullish, is that a volcano reference? The Ashen hole?
I don't know.
I think it's a Gen Z reference.
Something to do with like cooking? I don't know.
Gen Z does not use the word ashen.
Ever.
This is like New King James shit.
Will
If
the market
NVIDIA
finally unbend?
earnings aren't blow out the Ashen hole levels of bullish, will the market finally unpin? Jensen will beat and he will raise.
Hold on. I have something to say about this. It's very important. And I'm going to make this episode take way longer again. Yeah, look at that clock.
Yeah, I did. I promised my wife it would be shorter.
This has been an
week.
ongoing problem, and it needs to be talked about on here because I don't think I've talked about it on here, but I've talked about it on Market on Close a lot. These companies are no longer priced just to beat. They're priced for all future beats, accelerating linearly all the way out. Just a constant improvement. And if Jensen can beat and raise, but if he doesn't beat and raise enough, then the value of NVIDIA 30 years from now will drop. And people will sell, which has happened with Micron, happened with SanDisk, happened with all of these companies because they beat and raised. They published earnings that would make Donald Trump come to them and cry. Tears literally in his eyes, saying, I've never seen any earnings beat like these earnings were beat before. And they still dumped like 10% because analysts had predicted that they would keep beating earnings better forever. That's the pricing that the market had built into the price of that stock. And when that pricing changes, everyone who's an institution or a large shareholder who owns it goes, oh, fuck, I'm going to sell it now.
Okay. I know what our stupid bet's going to be this week.
Yes.
The same one we did the last NVIDIA
I already have
earnings.
a prediction for NVIDIA earnings like next morning.
Woo!
That's not the bet.
Oh, damn it.
We can make that part of the bet.
All right, cool.
So you don't remember what the bet we made last time?
No.
This will be good.
Not at
Okay,
all.
I'll remind you. Okay.
I'm assuming I lost it because you remember it.
I don't remember the outcome. I just remember knowing that it was important, and I remember that they hit the mark. Ron, did you have any time during that monologue to look up the Ashen hole And did you use incognito mode?
I did not, but the way that you pronounce it made it sound very Shakespearean, so let's just go with that.
I think it's from Elden Ring.
Oh, yeah, I can see that.
I'm going for it. I'm non-incognito. Blow out the Ashen hole.
Here we go. While we're waiting for that, I did want to correct the movie we were thinking of earlier was Snatch. So
No,
for
yeah.
anybody that was sitting around waiting to correct us, yeah, we did confirm.
Did we need it?
There would have been some our one listener would have been yelling at us the whole time, and so we're just getting ahead of that.
This is just like, it's Snatch. I can't believe you can't remember it's Snatch. And then just he missed the rest of the entire episode
Yeah.
because he's just been saying that the whole time.
Yep.
Okay.
Now they can re-listen in.
The listener, the single listener we have, if you could just weigh in somewhere on what the Ashen hole is, I need to know. So
I think
please.
it's an Elden Ring reference.
Well, Elden Ring did pop up in the non-incognito search, but it also said it could be a more aggressive or creative, mutation of the vulgar dismissal, blow it out your asshole,
Interesting.
which is something commonly said by all sorts of people.
So like
Blow it.
market cyclosporiasis?
I don't know. I've never told anyone to blow it out of their asshole.
I've told people to blow it out their ass. I've told you to blow it out your ass.
Yeah, but I've never said hole, asshole.
No. Yeah. I've never said hole. It's like way too descriptive. It kind of makes it weird. Instead of being like, mirthy banter, it becomes like dark and like, do you have a problem?
Yeah. Are you upset with me? Okay. All right. Next question. With as many key figures having left, we answered this, having left OpenAI recently, taking cash payout for their stake, is this finally the rats jumping ship and an indicator that this bloated monstrosity is about to burst? OpenAI also
their internal share
seems
buyback.
to have reached the limits of their. I know, but I'm going to read the question because they submitted it. Also seems to have reached the limits of their financing opportunities and will certainly not reach their projected revenue targets, which served as the basis for a lot of their financial obligations. What are the broader market implications if OpenAI collapses? If OpenAI collapses, it's all over. We are fucked. We are going to lose, $1 trillion in private money, which will be like a 5 to 6% hit to all money in the US, which will cause an equivalent drop in GDP, which gets us pretty close. It gets us a pretty nice recession and a risk of a depression. So,
will I still have free AI to write stuff with afterwards?
No. Google will then, being the monopoly in AI that it always wanted to be from the start, which is what started this spending spree. I've always said Google sold a 100-year bond to tell everybody, hey, we're not backing down ever, no matter what. We're in this for the next 100 years. So you might as well just stop playing this game of chicken now. And then everyone said, all right, we're going to play more chicken. So once the game of chicken finally ends, everyone having inflicted more pain on each other than they first thought they would.
How many chickens can a car run over before it ceases to function?
Google will then 69.
5?
Google will
69.
then
A flock
or 6-7. So about 6-8. 68. Yeah. Plus or minus 1. Google will then seek to recoup and regain all of their free cash outflows. And they will jack prices up so high that you will be in tears because you will once again have to actually use your brain to program things, and you will have to actually find real sources written by human beings to find information because you won't want to pay $20 a month for Google search.
Interesting.
Well, if you're programming, you won't want to pay like 20 grand a month. But if you're
Google
just
says
searching
it's
shit,
8,647 chickens.
okay, I was under.
I was way under. All right.
Okay, what do the boys think the Fed and Treasury could do to both rein in yields and inflation? And if they choose to fight rising yields with reversing balance sheet runoff or doing QE, and how would they manage the long end rising with inflation and debt? Again, you're leaving out the most important component of this entire discussion, which is very telling about the problem of how we're dealing with inflation to begin with. Is inflation is caused by out of control deficit spending. That is ultimately
What?
unproductive.
Wait, what if corporations
Congress
are also
spends.
deficit spending simultaneous to our government deficit spending? Like, what if corporations
Also
were
causes
spending
inflation.
more than the total amount of money coming in? Sorry. I'll stop.
Thank you.
The solution is for Congress to get their shit together. But we
Yeah.
keep electing shitbirds on both sides of the aisle. I do not politically discriminate against a shitbird. A shitbird is a shitbird, no matter what color they are. They come in
all
red.
suck. Let's
They
have
come in
direct
blue.
democracy.
And nobody that gets in there has any interest at all at creating a long-term sustainable system. The idea of the statesman is dead. It's all just a bunch of rats and grifters, and it's percolated all the way up to the top. Now even the presidency is full of rats and grifters, and we will rat and we will grift until there is nothing left to rat and grift, and then they will all disappear, and we will all be left to figure it out.
See, I would say that representative democracy is the most un-American thing ever. Like, what American would ever let somebody else go and voice their opinion for them when you could voice your opinion yourself to anybody who would listen?
Kind of like you could make a podcast that's 2.5 hours long.
Yeah, 2.5 hours. 2:45.
And it turns out the number of people that listen is 1.
That's more than enough.
Yes, it is. It's enough for me. I tell my students all the time, I'll lecture to an empty classroom. I get paid all the same.
How many people do you think listened to Mitch McConnell's last speech?
What
Exactly.
is it? His last, like his speech, or like the last speech given on behalf of the missing person?
Him.
Okay. You might win that old bet. Still haven't seen any. Still haven't seen Bo Peep out of him. He's been actively recuperating and recovering for quite a while now.
Until what was it, August 31st, right?
I think that was the
midnight on August 31st, something like that, and then he dies.
Yep.
JD Vance is on it. JD Vance has already booked his flight.
All right, it's now time for everybody's favorite.
Wait, give me 2 seconds.
You have literally one job.
Stupid bets. Who's gonna win? Who's gonna lose?
All right, I won last week. Yay for me. The 10-year ended the week just under 4.75, so the parlay on Bitcoin didn't matter, but Ron won the parlay.
Technically it's Dork. I made a mistake on the sheet, so I made 2 mistakes today. So yeah.
Worst producer ever. Thanks, Ron. Okay, so Dork technically won the parlay. That doesn't matter because Bitcoin went to the moon.
Wait, what was the? Oh, it was the above.
Yeah. So it was
Bitcoin
go above or under 63K.
Dirk probably would also like me to point out that the 10-year did go above 4.75. It just didn't end the week there.
I remember last weekend, the only bullshit part about you winning this is that last week you were like, it's never going to 4.75. So under 4.75. But it's okay. You can have it.
I think what I said was, it's not going to do it in a week.
Yeah, we have
which
a
is still
recording.
wrong.
The next morning, it was up like 15 pips.
But I would just like to specify, I've been very clear. I think yields are way too low in general, and they will go up eventually.
I know.
Okay. So this week, so if you forgot what the bet was last time, the bet last time, I believe, was on the operating margin of NVIDIA, because they always
I thought there was
print
also a question about a tire if he was going to wear the leather jacket.
might have been a parlay, because they always perfectly hit their 75% margin. They do whatever it takes, which is why I don't think it's a coincidence, a coinkydink, if you will, that Jensen announced recently that there would be a 15% price hike. Because he has a number to hit. Because Jensen, if he does nothing else, he will beat and he will raise.
Mm-hmm.
So obviously, my bet is that he will meet or exceed his operating. I don't know if maybe he'll try to exceed it a little bit, because he'll feel like he has to compensate for all the negative press that's going around right now. So I think he will exceed operating margin.
I say net margin under 54%.
What is it historically? Because I know it's
I think last
operating
month was
75, right?
55.6.
Okay.
I could do operating margin too. I just need to look.
We could
at
do
it.
both. Let me pull up their last.
I'm gonna do operating margin 62.42. So under 62.5. Or do you want to do gross margin?
Yeah. Okay. I'm thinking of gross margin. Sorry.
Gross margin like 75%.
Yeah.
I want to say gross margin flat.
So gross margin Q4 of 26, which their fiscal calendar, that would be the fourth quarter of 25, was 75.0. Last quarter was 74.9. So I think we're going over under on 75 or at.
Under 75.
Okay. I am over. So I think he's going to post a 75.1 to kind of give the middle finger to all the haters.
Oh, shit.
And I'll go with 75.
On the dot.
Yep.
Okay.
You like perfect 70? Damn. This is a tight bet.
He's going to meet.
And
this is,
tails.
by the way, we're going
fat tails.
By the way, we're going on gap, not non-gap. So does that change your answer?
No.
That helps you.
Yeah, I know.
Okay. Oh yeah, their gap and non-gap gross margins are expected to be 74.9 and 75%, respectively. So 74.9 is what they expect, plus or minus 50 basis points. Ooh, so my bet looks real dumb. Do we want to do another?
We could do EBIT margin.
Or we could just not do. Let's do a number that's actually on their sheet, so we don't want to get too down in the
Enterprise
weeds.
value to forward revenue, price to book ratio.
Why not just revenue percent quarter over quarter or year over year?
What about return on assets?
No.
I'd say let's do revenue year over year. What do you guys think?
I don't know what their revenue was.
Their revenue last quarter was 81.6 billion. And then the quarter before that, 68.1.
We're comparing against Q4 2025 or Q2 2025, right?
Yeah, if we want to do year over year, it was quarter the
Oh, it's gonna be up like fucking 100%.
Yeah.
100%.
Yeah, like greater than 30 billion. Or wait, no, I'm thinking cash flows.
That would be a re-acceleration in revenue, if so.
Quarter two.
Is-
Oh, 46. Shit. I don't know. Yeah, like 90 something percent year over year.
Okay, I'll take the under on that.
Okay.
Yeah.
I'll do like 90 over 90.
So you'll do over 90. How about I take 80 to 90 as the parlay? And then J-Fresh, you find under 80?
Yeah, I'll take under 80.
All right. There we go.
Cool.
I think we've locked it in.
All right. There's no better way to end a podcast that's way too long that one person listens to than with a really stupid bet. So with that, thank you all.
We
All.
bid you a
The royal all, and blow it out your ashen hole.
yes.